For years, investors have been in pursuit of passive income, the ultimate goal for achieving financial freedom. The idea of earning cash effortlessly without trading time for money is very appealing. While there are different ways to earn passive income, one strategy that has proven to work over time is investing in dividend stocks. But the question that's always been alongside it is, which dividend stocks do you invest in? Can you choose just some and let them work their magic? And most importantly, can this investment truly provide financial security for John? In this video, we'll show you and John the best 10 buy and hold forever dividend stocks. How much can you earn from an initial investment of $10,000? We'll show you how you can make a portfolio of these that not only provides steady income, but also has the potential to grow your wealth exponentially. In the end, we'll show you how you can start by investing just $200 per month and still make over $10,000 per month. But before looking into these, one mistake that most investors make is focusing too much on the current dividend yield. You'll see how this can be solved. Finding a company with a long track record of consistent dividend payments is only part of the winning formula for investing in dividend stocks. Dividend growth matters too. Rising dividends not only make a stock more attractive to new income investors, but steady dividend increases over time means increasingly higher dividends over time. Now that we've got that cleared up, we move to our top 10 buy and hold forever dividend stocks, arranged from modest to highest dividend growth rate. Our first of the top 10 picks of forever dividend stocks is PepsiCo. Known by the ticker symbol PEP, this dividend aristocrat has been consistently increasing its dividends since 1989. That's 34 years of consecutive dividend growth. The company has a current dividend yield of 2.68%, but the real dividend yield that long-term investors like John should be interested in is their 10-year dividend growth rate of 8.02%. Based on that rate, if John invests $10,000 today and holds this stock for 30 years while reinvesting his dividends, his investment after 30 years will be worth $108,287, paying him an annual dividend of $8,266, or roughly $689 per month. The best thing about PepsiCo is that it can easily hit that forward growth rate. That's because if you look at the historical records over the last 10 years, the company's dividend has compounded by 10.6%, and growth in recent years has averaged about 9%. To top it off, this aristocrat has a payout ratio of about 80%, which should provide plenty of room for future dividend growth. PepsiCo's main advantages are its established brands and distribution channels. It has some of the most famous consumer food and beverage brands in the world, including Pepsi-Cola, Gatorade, Frito-Lay, Quaker, and Tropicana. The company's largest 22 brands each generate at least $1 billion in annual sales and have established themselves as favorites with consumers. Plus, its unique positioning as a dominant provider of snacks and beverages makes it a key vendor for its retail customers because it can serve as more of a one-stop shop. Our next forever buy and hold contender is Ecolab. Known by the ticker symbol ECL, this dividend aristocrat has been consistently increasing dividends for 30 consecutive years. ECL has a current dividend yield of only 1.13%, but for long-term investors like John, it promises a 10-year dividend growth rate of 8.96%. Based on that rate, if John invests $10,000 today with reinvesting and holds this stock for 30 years, his investment after 30 years will be worth $142,725, paying him an annual dividend of $12,103, or roughly $1,008 per month. As for its mode of business, Ecolab sells a wide range of sanitizing, cleaning, and water treatment systems that help customers in virtually every end market maintain clean environments, keep their food safe, and optimize their energy and water use. Altogether, the company serves over 1 million customer locations in more than 170 countries. What sets Ecolab as one of the best dividend aristocrats to own for the long term is its leading technology portfolio, sticky customer relationships, and a large opportunity for growth. The next pick on the list is the 3M Company. Known by the ticker symbol MMM, this dividend aristocrat has an exceptional dividend growth track record, having increased its dividend for over 60 years in a row. Currently, the company offers a very competitive dividend yield of around 5.52%, making it one of the high-yield stocks in the market. Not only that, it also offers a competitive 10-year dividend growth rate of 9.33%. Based on that rate, if John invests $10,000 today with reinvesting, his investment after 30 years will be worth $159,085, paying him an annual dividend of $14,016, or roughly $1,168 per month. With a history of over 100 years, 3M operates in more than 200 countries and has a global presence. The reason 3M has been at the top for so long is it's a diversified industrial company known for its wide range of products, from adhesives to personal protection gear. What sets 3M apart from other dividend aristocrats is a diversified product portfolio and strong global presence. Its wide range of products across various markets makes it more resilient compared to its competitors. To top it off, the company's history of resilience during economic downturns and commitment to innovation has been top-notch around the world. Next on our list is NVDA Corporation. Known by the ticker symbol NVDA, this company is relatively new to the dividend market compared to all our other forever stocks to buy and hold. But the company has shown some serious growth over the past decade to stamp its footing in the technological world. NVIDIA has a current dividend yield of only 0.04%, and this low yield is why it's ignored by many beginners. But that's where they're wrong. For long-term investors like John, NVIDIA promises a 10-year dividend growth rate of 11.02%. Based on that rate, if John invests $10,000 today and holds this stock for 30 years, his investment after 30 years will be worth $260,829, paying him an annual dividend of $26,868, or roughly $2,239 per month. NVIDIA stands out in the technology industry for its exceptional performance and dominance in the GPU and AI markets. Its GPUs are considered industry standard for high-quality graphics, driving the growth of the gaming sector. In fact, with a market capitalization of around $1.09 trillion, NVIDIA is a leading player in the gaming, data center, and automotive industries. Its GPUs are widely used in gaming consoles, PCs, and high-performance computing systems, while its AI solutions are applied in various sectors, including autonomous vehicles, healthcare, and robotics. The company is known for its continuous innovation and cutting-edge technologies. The company's commitment to innovation, market dominance, and financial strength make it an attractive option for investors seeking exposure to the technology sector and potential dividend growth. If you think $2,239 per month is a good return, wait until the end, where we'll show you how a portfolio of these stocks can pay you upwards of $20,000 per month. Next on our list is TROW Price. Known by the ticker symbol TROW, this company has been consistently increasing its dividend for 36 years straight. TROW has a current dividend yield of 4.13%, but for long-term investors like John, the company promises a 10-year dividend growth rate of 12.89%. Based on that rate, if John invests $10,000 today and holds this stock for 30 years, his investment after 30 years will be worth $449,702, paying him an annual dividend of $53,581, or roughly $4,465 per month. This is one of the best dividend aristocrats to own because of its brand strength, strong track record of performance, relatively low maintenance fees, and strong distribution channels. It is in fact one of the largest asset managers in the world. The company offers a wide range of mutual funds that pursue investment styles, including growth, value, sector-focused, tax-efficient, and quantitative approaches. By assets under management, close to 80% of T. Rowe Price's assets are in stock and blended asset portfolios, with the remainder invested in fixed income securities and money market portfolios. With a normalized payout ratio sitting near 72%, the annual dividend growth of at least 10% per year going forward is very much achievable. Next on our list is Costco Wholesale Corporation. Known by the ticker symbol COST, this company has a strong dividend track record, having raised its quarterly dividends for 18 consecutive years, making it an appealing choice for dividend investors. Its dividend yield is currently at 0.74%, which is considered relatively low compared to some other dividend stocks. But it's not a stock to be overlooked for its low current yield. For long-term investors, the company promises a very respectable 10-year dividend growth rate of 12.96%. Based on that rate, if John invests $10,000 today and holds this stock for 30 years, his investment after 30 years will be worth $458,944, paying him an annual dividend of $54,957, or roughly $4,580 per month. This proves that an initial low yield can be very deceiving with these stocks, and that's the mistake most investors make, focusing too much on the initial yield. Costco, operates membership warehouses in various countries, including the United States, Canada, the United Kingdom, Mexico, Japan, and others. It's known for its bulk shopping model, offering a wide range of products to its members at discounted prices. The company stands out for its consistent profits and cash flows, making it a stable and reliable investment. Its membership-based business model and discounted bulk pricing attract a loyal customer base, driving its sales growth. One reason it's been thriving and sharing increasing dividends for 18 years straight. Another top pick is JP Morgan Chase & Company. Known by the ticker symbol JPM, JP Morgan Chase is a leading global financial services firm. Its dividend yield is currently at 2.6%, but for long-term investors, the company promises a very generous 10-year dividend growth rate of 15.1%. So, if John invests $10,000 today and holds this stock for 30 years, his investment after 30 years will be worth $853,354, paying him an annual dividend of $117,556, or roughly $9,796 per month. And a company like JP Morgan adds icing on the cake, since it's one of the largest and most well-established banks in the world with a history of over 200 years. The company operates in various segments, providing a wide range of financial products and services to individuals, businesses, and institutions. The company is renowned for its strong balance sheet, meaning it holds substantial liquidity to prepare for economic downturns or uncertain times. This conservative approach to managing its finances has helped the bank navigate through challenging periods like the financial crisis of the late 2000s and maintain stability. Despite the inevitable cyclical nature of the banking industry, JP Morgan has consistently shown resilience and remained a powerful player in the U.S. financial system. Its strong financial position and profitability give investors confidence in its long-term prospects. Now we move on to the big leagues, stocks that have the potential to pay over $10,000 per month. Abbvie is a leading pharmaceutical company known for its generous dividend policy. It has an impressive track record of increasing its dividends for over 50 years in a row, earning the prestigious title of Dividend King. Currently, Abbvie offers one of the highest dividend yields in the industry, standing at a very impressive 3.96%. But even better, for long-term investors, the company promises a very generous 10-year dividend growth rate of 17.16%. So, if John invests $10,000 today and holds this stock for 30 years, his investment after 30 years will be worth $1,545,682, paying him an annual dividend of $239,061, or roughly $19,922 per month. That number might seem unrealistic, but that's how reinvestment works. It multiplies your investment, and a good dividend growth rate does the rest. Abbvie stands out in the pharmaceutical industry due to its strong dividend history and high dividend yield. The company's flagship product, Humira, has been a significant contributor to its revenue and free cash flows. Its strong cash flows and financial flexibility support the stability of the dividend. The company's long history of consistently increasing its dividends makes it an undeniable must-have choice for income investors seeking stable returns, and a must-have for our portfolio in the end, which will pay upwards of $20,000. Our next stock on the list is the undisputed leader in the payments processing industry, Visa. Known by the ticker symbol V, it has raised dividends for 14 consecutive years. Visa currently offers a dividend yield of around 0.76%. While this yield may seem low compared to some other dividend stocks or the broader market, the important figure here is the huge 10-year dividend growth rate of 19.02%. Based on this, if John invests $10,000 today and holds this stock for 30 years, his investment after 30 years will balloon to $2,636,157, paying him an annual dividend of $447,023, or roughly $37,252 per month. As we said, Visa is the undisputed leader in the payments processing industry. It operates a global payment technology network that facilitates electronic fund transfers between consumers, businesses, banks, and governments. Visa's dominance in the payments processing industry is a significant factor that sets it apart from its competitors. With over 4.2 billion cards on its network, it surpasses its closest competitor, MasterCard, by a wide margin. The company's extensive global reach and large customer base create a strong competitive moat, making it challenging for new players to enter the market and challenge Visa's position. Now, before we show you the safest method to earn $30,000 per month using a portfolio of 10 stocks, here comes the final buy and hold forever dividend stock on our list, Cintas. Known by the ticker symbol CTAS, Cintas is a lesser-known dividend aristocrat. It's the biggest provider of uniform rental services in the country and serves more than 1 million business customers operating in a wide variety of service-providing and goods-producing industries. The business makes money by renting out uniforms for workers to wear, collecting, washing, and sending them back to be used again. While this is certainly a boring business, it has numerous competitive advantages that generate very predictable cash flows that can be used for dividend growth. Cintas has over 8,000 local delivery routes, which help it offer reliable service and relatively low costs for each region it operates in. The company has increased its dividend for over 30 consecutive years and has one of the best dividend growth profiles of all the dividend aristocrats thanks to its 34% payout ratio and the opportunity to continue consolidating its fragmented industry. Currently, the business offers a dividend yield of 1.08%, but when you look into long-term dividend growth, it promises a 10-year dividend growth rate of 21.8%. So, if John invests $10,000 today and holds this stock for 30 years, his investment after 30 years will grow massively to $5,828,946, paying him an annual dividend of $1,114,793, or roughly $92,899 per month. That is the power of reinvesting dividends, but it only works when you give it time to do its magic. So, does this mean you should go and invest all your money in Cintas? The answer to that question is a resounding no. Remember the first rule of finance: don't put all your eggs in one basket. In simple terms, putting all your investment in one stock is never a good idea, because industries change. For instance, buying oil company stocks might feel reasonable and safe, but what if the new electric vehicle revolution takes charge? The oil industry will take a hit, and you will lose all your investment. So what should you do? Well, we can answer that. Build a portfolio of these 10 stocks. This means if you spread your $10,000 in all these investments, you won't risk losing all of your investments if one of the industries completely shuts down. Now the question is, how much can you earn with a portfolio of these companies? Let's find out. We know PepsiCo pays a 10-year dividend growth rate of 8.02%. Ecolab, 8.96%. 3M Company, 9.33%. NVDA, with a decent 11.02%. TROW Price has 12.89%. Costco Wholesale Corporation with 12.96%. JP Morgan Chase with an excellent 15.1%. Abbvie has a tremendous 17.16%. Visa Incorporated with a promising 19.02%. And lastly, Cintas with an impressive 10-year dividend growth rate of 21.8%. Now, if you divide all these rates by 10, which is the number of stocks we're holding, you'll get your average portfolio return, which in our case would be 13.63%. We can use this average return to find out how much John can earn from his investment. For this portfolio, we'll show you two strategies. First, with one-time investments of $10,000, $50,000, and $100,000. And secondly, only investing $200 or $500 per month, starting with one-time investment plans. Based on this rate, if John invests $10,000 today and reinvests his dividends, his initial investment in 30 years will be valued at $557,500, paying him an annual dividend yield of $69,930, or about $5,827 per month. That is more than enough for someone to retire and never worry about meeting deadlines. John can have a very happy, stress-free life after retirement. But what if you have an initial investment budget of $50,000 or $100,000? Well, let's step up to the big leagues, starting with $50,000. If John invests $50,000 today and reinvests his dividends, in 30 years his investment will balloon to a jaw-dropping $2,787,498, paying him an annual dividend of $349,651, or roughly $29,137 per month. This might look like an exaggeration, but these numbers are completely achievable. This is what the snowball effect can do with buy and hold forever stocks. And the best part, all these companies are some of the safest in the entire world. So, pick the right stock, reinvest, and give your investment time to grow. Now let's move on to the $100,000 budget. If John invests $100,000 in this monster portfolio, in 30 years his $100,000 will be valued at an astounding $5,574,997, paying him an annual dividend of $699,302, or roughly $58,275 per month. With this monthly income, John can lead a worry-free life, afford his dream car, dream house, global travel, all while still having enough left for luxuries and a comfortable lifestyle. But let's be honest, you may not have an initial investment budget saved up right now. No worries, you can go with our second investing option, which is investing $200 or $500 per month. If you invest $200 every month in this portfolio, in 30 years you will have invested $72,000. By the end of the 30-year period, if you reinvest the dividends you earn, your investment would be valued at $986,149, paying an annual dividend of $123,532, or roughly $10,294 per month. With a $500 per month investment in this portfolio, in 30 years, you will have invested $180,000. And by the end of that 30-year period, if you reinvest the dividends you earn, your investment would be valued at $2,465,373, paying you an annual dividend of $308,830, or roughly $25,736 per month. This shows that if you don't have an initial investment saved up for now, that's not an obstacle. You can start today with a monthly investment and still hit the $20,000 per month mark. This video was about investing in 10 buy and hold forever dividend stocks that can earn up to $20,000 per month. But the question is, how did we come up with these stocks? For this, watch our video on the screen now, How to Build a Monster Dividend Portfolio, where we show you a step-by-step guide on choosing profitable companies, avoiding mistakes, and still making over $30,000 per month.